Hello everyone, welcome back to your midweek market updates on technical insights. This Wednesday morning, Asian market mostly opened higher as investors weigh the ceasefire between Israel and Iran, as well as the fresh commentary from the US Federal Reserve. There has been a growing optimism that the ceasefire between Israel and Iran will likely hold, leading to a peace talk. The Hang Seng Index climbed for a fourth straight day, adding more than 0.7% in early hours trading today, and the Hang Seng Tech Index rose as well, up more than 0.8%. For STI Index, we added about 0.4% today, on track for a 1% gain this week. Overnight in the US, we also heard from Fed Chair Jerome Powell that the US Fed was committed to keeping inflation in check and would keep the rate steady until there's more clarity on how the US tariffs might affect prices. He also mentioned that the Fed policymakers were well positioned to wait and learn more about the likely course of the US economy before considering any adjustment to the policy stance. In overnight trading, the Dow Jones Index climbed 507 points or 1.19% to close at 43,089 points. This is the Dow Jones Index third consecutive winning session. The S&P 500 gained 1.1% or 67 points to close at 6,092 points. And we are now just less than 1% away from the all-time high that we saw on the 19th of February this year. Tech-heavy Nasdaq Composite Index gained 281 points or 1.43% to end the session at 19,912 points and is now within touching distance of the all-time high that we saw in December last year at 20,204 points. Crude oil prices has also pulled back in the last 2 days, with WTI crude futures dropping more than 6% yesterday, and this decline in energy prices have helped to lift stock closer to their all-time high. Investors will now be watching the new home sales data that will be due tonight and also monitor Fed Chair Jerome Powell as he speaks before the US Senate Banking Committee. Back to Singapore, our STI started the trading week negative, down 0.1% on Monday due to the Israel and Iran conflict that started over the weekend. On Tuesday, our benchmark index managed to rebound 0.65% as US President Donald Trump announced the ceasefire deal between Israel and Iran. This Wednesday morning, STI continued to jump higher by about 0.47% to 3,922 points as investors foresee that the delicate ceasefire will likely hold, leading to a 6% drop in oil and energy price to a 2-week low. Week to date, our STI is still up about 40 points or about 1%, and year to date, the STI is still up by about 3.53%. On Tuesday, our three local banks also rebounded from Monday's drop. DBS gained about 1% on Tuesday to close at $44.30, while OCBC also rose 1.4% to $16.16, and UOB added 1.6% to $35.32. All three banks continued their rebound on Wednesday morning, up close to 1%. Top gainer on the STI on Tuesday was Jardine Matheson Holding, up 2.3% to $46.35, while the biggest decliner was Singtel, falling 1.5% to $3.83. So for today's technical analysis, let's take a look at Singtel. On Tuesday, Singtel share price dropped by 1.5% to close at $3.83, making it the biggest loser on the STI index. This Wednesday morning, Singtel share price continued the slide down by another 1% in early trading. We previously covered Singtel on the 7th of April video right over here, and you can click the link around this video to rewatch that analysis. In the previous analysis, we noted that Singtel share price has been on an uptrend since the beginning of this year and has now hit a new multi-year high of $4 on the 12th of June. Singtel share price managed to break above this $3.40 level, which was a key resistance level set in the September of last year. We identified that the key support level for Singtel share price can be seen at the 20 days and the 50 days moving average, then at around $3.40 and $3.34 respectively. And Singtel share price has also hit the target resistance level on the previous year-to-date high that we identified at $3.64 in the early part of April. This level now at $3.64 could have a change in polarity and become the new support level for Singtel share price now. Looking at the moving average, Singtel share price has now breached below the 20 days and the 50 days moving average, indicating that there could be more downside pressure to Singtel share price in the near term. The next supporting moving average will be the 100-day moving average in amber right here, now around the $3.60 level, which may find confluence with the previous year-to-date high of $3.64 in the next few trading weeks, lending further support at this level. Looking at the indicators, the MACD is now negative, indicating the presence of downside momentum, suggesting that Singtel share price is likely to correct down further. The RSI reading now at 42 has also come down from Tuesday reading of 52 points, reaching the 50-point neutral mark, suggesting that there could be further downside pressure likely to come. So for investors looking at Singtel, it will be prudent to be patient and wait for a further pullback towards the $3.60 level or the $3.64 level before accumulating on Singtel shares again. Looking at 17 analysts covering Singtel right now, 10 have a strong buy call, 4 have a buy call, 2 have a hold call, and 1 have a sell call. The average 12-month target price among them is $4.32, representing a possible 14% upside from the levels that we see today, with the maximum estimate at $4.60 and a minimum estimate around $3.79. And these are the updates that I have this week. If you find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.